Welcome back, dear traders. Today, markets worldwide are closed for Christmas holidays. There is no trading in the United States and the European Union, and exchanges in the UK and Canada will also be closed tomorrow. However, traders still hope to make gains during the holidays. First, let's sum up the results of last week. As forecasted earlier, the US market managed to find room for growth despite a volatile session and the strong reaction of traders to the latest batch of macroeconomic data. The Dow Jones Industrial Average closed higher by 176 pips or 0.53%. The NASDAQ managed to gain 0.21% despite remaining under pressure. And the S&P 500 was the best performing index of the past trading day and increased by 0.59% to 3,844 points. Today, US markets are closed for Christmas, as stated earlier. Last week's final data releases did not bring clarity to market participants. According to a report by the US Commerce Department, consumer spending changed negligibly in November. Inflation continued to decline, but it did not affect the stance of the Fed Reserve. The Personal Consumption Expenditures Index, the Fed's preferred inflation gauge, rose by 0.1% last month after growing by 0.4% in October. The benchmark survey indicated the US consumers expect price pressure to ease significantly next year. Although the data was weak, it largely matched expectations, calming markets slightly. Out of the components of the S&P 500, the energy sector led to the upside thanks to higher oil prices. Crude oil went up after Russia announced it could cut its daily oil production by as much as 7%. Even the tech and healthcare sectors, which largely spent most of the day in a negative territory and had the worst performance during this session, managed to post slight gains, with the tech adding 0.08% and healthcare edging up by 0.12%. Meanwhile, the S&P and NASDAQ lost ground for the third straight week. The S&P 500 index declined by 0.2% last week, marking the third consecutive weekly drop, while the NASDAQ fell by 1.9%. However, the Dow added 0.9% and was able to end the three-week losing streak. Shares of Tesla hit the lowest level in more than 2 years in a volatile trading, as Elon Musk pledged not to sell the stocks at least 2 years. News Corporate, the parent company of Dow Jones, added 2.8% following reports that billionaire Michael Bloomberg was interested in buying Dow Jones or the Washington Post. However, he denied those rumors later. In addition, the Bank of America reported the highest ever weekly equity outflows on record. Investors sold more than $41.9 billion of shares, according to the Bank of America report published on Friday. US value funds and passive equities also recorded record weekly net outflows. The Bank of America noted that the record outflows was caused by tax loss harvesting, a strategy that involves sending assets a loss of offset gains taxes. Furthermore, investors reduced their cash holdings by $59.5 billion, the biggest drop since February 2022. They sold the largest quantity of investment-grade and high-yield bonds in 9 weeks. Meanwhile, the stock market could use some holiday cheer right now. Historically, equities performed well in December this month. However, the S&P 500 lost about 6% as Tesla, Amazon and other stocks suffered major losses. Since the beginning of 2022, the index slumped by almost 20% and is now on a track for its worst early performance since 2008. The market still can narrow these losses. According to statistics data, US stocks have rallied during the last 5 trading days of December and the first 2 days of January about 75% of the time due to low liquidity, tax laws and investing of a year-end. When the Santa Claus rally does not occur, it's enough to darken the mood for the whole next year. On average, the S&P added about 4.1% after December without a Santa Claus rally, compared to 10.9% gain following a period when one takes place. January gains are also muted in a non-Santa year. The index falls by about 0.3% in average compared to 1.3% gain following a Santa Claus rally. If such a rally does not occur, it means something in the market is causing confusion or serves as an obstacle. There are enough negative factors this year, such as inflation, Fed policy, recession fears, stagflation, geopolitical tensions, lockdowns in China, and others. All these factors wind down on equities in 2022, and the sharp drop this December means that fear of a hawkish Fed policy is enough to override seasonal trends. However, the month is not yet over and there is still hope of a turnaround. This trading week will be short, but there are still some events that could give support to traders, such as a positive macroeconomic data. There are not many reports due to this week, with the key data releases being a batch of US real estate data and an unemployment claims report. So the forex market is not standing still during the winter holidays. However, trading has been quite muted recently. The US dollar index shed 0.08% intraday and hovered around 104.20. No sharp movements can be expected from the US dollar, with the intraday corridor for the index being defined between 104.10 and 104.30. The US dollar index is approaching the end of 2022 in a slight disarray, similar to other assets. Although a new dollar rally is out of the question, the greenback is on a more solid footing compared to the risky assets. High inflation and hawkish Fed policies have sent shockwaves through the markets this year, and many experts warn that investors should not expect the Federal Reserve to stop anytime soon. The Fed, which raised the key interest rate by a whopping 425 basis points, is trying to strike a delicate balance between reducing inflation and preventing a recession. Higher interest rates can lower inflation. If the tightening cycle lasts too long, however, it could lead to an economic recession. A very short series of could in turn lead to stagflation, a period of high inflation coupled with a sluggish economic growth. With the risk of a stagflation being high, the US Central Bank may have no choice but to move forward with its policy, which means the US dollar will remain strong. The Canadian dollar extended its advance against its US counterpart in muted trading on a Monday. USD CAD decreased by 0.05%, traded at 1.3590. The trading corridor for the instrument is seen between 1.3570 and 1.36. The loonie ended last week in a positive territory thanks to rising crude oil prices. Canada's GDP data matched market expectations and did not surprise traders. Brent crude futures rose by 3.6% on Friday, while WTI did 2.6% amid fears that Russia may cut oil production. Russian oil exports from the Baltic states are projected to fall by 20% month-on-month in December, and the country's output could fall by 500,000 or 700,000 barrels a day in early 2023. Oil prices were also affected by the winter storm Elliott, which reduced crude oil production in the United States. Freezing temperatures and wind gusts which hit the United States on Friday left more than 1.5 million homes and businesses without power. oil refineries in Texas cut gasoline and diesel production due to equipment failures, while heating and electricity costs rose sharply as a result of these losses. And the cult knocked out about 1.5 million barrels of daily refining capacity on the US Gulf Coast. Facilities of Total Energies and ExxonMobil were shut down, boosting oil prices and pushing up the Canadian dollar. The cryptocurrency market is fluctuating moderately this holiday weekend, and the crypto assets are largely mixed, with Bitcoin added about 0.1% intraday and trading near the high of $16,840. At the same time, Ethereum, Solana, Ripple and Litecoin fluctuated between minus 0.9% and plus 4.3%. Monday session should not bring any surprises as investors are on break. Furthermore, Bitcoin was hardly able to leave its range even during periods of more active trading. So the leading cryptocurrency is expected to move in a very narrow range between $16,760 and $16,880. Tomorrow's macroeconomic data will give more clarity to the market as investors still hope for a rally of major indexes. InstaForex analysts wish you profitable trades this holiday season and see you tomorrow.